back. Let's look at the auto sector. And here's a quote: India is our top priority and everything else comes next. That was the word we got from Royal Enfield Siddharth Lal. He was in an exclusive conversation with my colleague Shireen Bhan. Siddharth Lal, who is representing India at the EY World Entrepreneur of the Year Awards in Monaco, spoke about details of his expansion plan for the domestic market, said that Royal Enfield will expand its footprint with a focus on North India, via small format stores, deeper distribution, even as the company expands its global presence. Listen in to what will be, of course, a very interesting chat for stock market investors.
Well, the aspiration is that in every country that we enter, we want to become a big player. We want to be 5% of the market, 10% of the market. We want to be the biggest player in the mid-sized market, which is where we feel that, especially in developing markets, there's a huge base of commuters in Brazil, China, more in Brazil, Thailand, Indonesia. There's a lot of commuters, and they need something special to rise up to, and that's what Royal Enfield is all about. So much bigger numbers, obviously. I mean, from 2,000 a month, it should be 10x or 20x that. But that's, and we're going to get there. It's a matter of 10 years or so, and but we're on the right path.
One concern that that investors may have is that as you try and expand your global presence and this aspiration of creating a global brand, are you perhaps going to ignore the domestic market? And I'll ask you that in the context of the fact that you're still about 6% of market share here as far as the domestic market is concerned. So where does India fit into this aspiration and the strategy in the next decade?
I mean, I should have said that before, because there's absolutely no question about it. India for us is market number 1, 2, 3, 4, 5, and then after that comes everything else. So there's no question at all that India is going to be the top priority for decades to come. It's also the base and the foundation on which we have the strength to go anywhere else. So we have to, India is our strength. India is where our home market is, and it's a huge home market. So any motorcycle, just as an example, any new motorcycle that we develop, even our 650 twins, the reason they're 650 and not 800 or 1000 cc, for example, is that we wanted it to be relevant to India. And you can see that already, that our existing 4 million customers of Royal Enfield, they're really warming up to our 650 twins. But honestly, if it was much bigger than that, if it was much more expensive than that, we wouldn't have been able to make it. So the India strategy is absolutely critical core to Royal Enfield and its global ambitions.
Okay, let me try and get more color on the India strategy, because as you pointed out, that's the number 1, 2, 3, 5, 10 market, at least as of now, as far as Royal Enfield is concerned. What is it going to be driven by? Is it going to be driven by better distribution? Is it going to be driven by trying to sort of go in there and plug whatever the geographical gaps that you see in the market? How much of it is going to be driven by product, Siddharth, is the question that I have for you.
Well, it's got to be both. There's no question about it. But and even Vinod Dasari, who's joined us recently as CEO, has taken firstly the India side, and we've been spending a lot of time on that as the core area. And there we break it up into two. We have the highest potential, maybe the northern belt, which is undersaturated, relatively poorer part of the country, where it is much more about distribution. So we're getting deeper and deeper into markets like UP and Madhya Pradesh and Bihar and Rajasthan and even Orissa, Andhra, West Bengal. We're going to have many hundreds of those stores coming up in this year itself, which are smaller format stores, which can help us getting deeper into the heartland markets in India. Whereas in the more mature markets, like let's say Kerala or Punjab or Karnataka and Maharashtra, we have already very good distribution, so there's going to be more product-led.
All right, that's Siddharth Lal. Doesn't talk very often, a rare conversation there about the future strategy that Royal Enfield has. But let's move on. Nischal Maheshwari, the CEO of Institutional Equities and Advisory at Centrum Broking, joins us now to talk about a range of issues. Nischal, hi, good morning. Always a pleasure speaking with you. I wanted your thoughts first up on the revised Feb 12th circular, and more importantly, if you're bullish on any of the PSU banks and the impact that this circular would have.
So I think this is positive. It was also expected that and RBI at that point of time, when the Supreme Court had come out with this directive, RBI had said that they will come look into it and come with a revised circular. So I think this is a positive step. Definitely now we have to see how it does it help in basically the NCLT issues by cutting the timelines. That is what we have to see. Yes, it is going to be, I think, it not only PSU banks, but I think most corporate banks, I think it is going to be positive for.
Okay, Nischal, good morning. Have you seen this report by an independent company called RED? I think it's located outside India, on a couple of NBFC companies, RelCap and DHFL, okay, housing finance company. Do you think there is any additional bad news, or I mean, if you have read the report, or most of this is known?
So Lata, I have not seen this report, but as things go, I think a lot of this is already known. Now, will there be more issues out there? Really, you don't know actually. I have not read the report, so it's very difficult for me to comment on that, whether they are real issues or not.
Okay, Nischal, hi, good morning. Your thoughts on auto stocks? We had a bit of a rally play out in stocks like Maruti after the monthly sales, but that's getting sold into a bit.
Morning, Anuj. My view still remains to be, I think we are a couple of quarters away before we actually start looking at any of these auto stocks. Two-wheelers to an extent basically, but that also we have to see what kind of rainfall we have. We already delayed. I think IMD has put out saying that first 9 days we are down by around 45% as far as rainfall, expected rainfall was concerned. So I think this is all delaying the process of recovery. So I think it's best to avoid for another quarter at least before we start seeing, before you want to actually look at some of these stocks. Two-wheelers is the first one basically which I would want to actually go out and put it on my radar. So two-wheelers are the stocks basically which I would look out, but I think CVs and PCVs I would say best avoid.
Okay, Nischal, you know, HUL had an analyst day on Friday, and the thing that stayed with me is their commentary about demand, where they say that in the near term, demand trends continue to be very subdued, but the company will remain ahead of the curve. So they're trying to sort of combat the slowdown, but slowdown still exists. How do you approach a stock like HUL now? I mean, it's still at its lifetime highs.
No, obviously, I think people are hiding in the FMCG sector. We are not very negative on the outlook as far as FMCG is concerned. We continue to believe that the volumes have been okay, not as bad as the market expected in the last quarter. So, though HUL was slightly lower than expectation, but I would say basically if we have a good monsoon and a well spread out monsoon, I think FMCG would be the first stocks actually which will recover fast. So put it on the horizon basically, or put it on the radar, but I think at the moment we would say avoid HUL also.
Oh, okay. Actually, you know, would you go for mid-caps now at this juncture? We saw mid-caps outperforming, but much of it got overturned last week. Are you still looking for value in mid-caps, or would you stick to safety, large caps?
Lata, I would stick to safety, but not only in large cap, but I think there are selectively mid-caps also basically which are good solid stocks, strong management, good track record. I think those are the stocks one can actually go out and look for. So I think safety is first at this point of time actually. I wouldn't actually go out and start buying stocks on the growth front. As yet, I think safety is prime to us.
Okay, so safety is prime. What do you do with, you know, some of these so-called safer haven stocks, maybe the IT names, because they're sort of de-risked from the slowdown that we're seeing, at least in the domestic environment. If you own them, would you top them up, or are you cautious here as well?
No, we would be definitely. So when we are saying safety, basically, I mean IT would be up there. The question is whether we should be we have overweight on IT or not. So I think the question is basically what kind of growth and how the rupee behaves. So that is what is not actually pushing us to go overweight on IT, and we are neutral on IT. But if the rupee starts depreciating again, we might go overweight on IT.
Okay, Nishchal, what about cement? We had a rally, but you know, the last few days there's been quite a bit of decline, especially in the southern cement stocks.
So I think cement is a good space to be in. I think given that this government has been very strong on in the first term, I think the second term equally strongly they will come back. And I've seen various ministries discussions. They are very keen about picking up the infra where they left. So I think cement should be in a good spot going ahead. Now we have to be selective basically whether we want to buy any of the South Indian cement companies or Central India seems to be better to us, Central and North, where the capacity utilizations are slightly better, volumes are good, and they are holding on to the prices. So I think yes, cement is a good spot to be in.
Okay. Nishchal, we'll leave it at that. Thank you very much for joining us and giving us the benefit of your advice on several sectors and stocks. We will touch base with you soon. We have to take a quick break. We are going to come back. We'll have the opening rates. We will also have Mr. S.P. Tulsian joining us.